What's up everybody? Welcome to the Stocks channel. My name is Cory and today we had another low volume flat day in the stock market. We continue to see this low volume melt up and we're getting very close to the next price targets on SPY. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we see SPY going up only 0.04% today as we continue to slowly hike up towards that next price target at $413. Keep in mind down here that we're still getting very low volume, so the risk is still at this gap close around $400.60. If we see any amount of selling volume stepping in, this thing is going to take the elevator down, and that's exactly what the stock market does. It takes the stairs up and the elevator down, and this low volume melt up is exactly what taking the stairs up feels like. You can see all of these candlesticks from March 25th are all green, meaning that we continue to close higher than the opening price. Eventually that trend will shift because that is not a sustainable rally in the stock market. Eventually we will see sellers stepping in, and because we're going up in a straight line, there's not a lot of support below, so the best thing to focus on right now is going to be this gap. We could find support at the top of the gap at 403 or the close of the gap around 400. It's also possible we retest the 20 simple moving average at one point, which is now trading around 398. The upside price targets are 413 and 417, and depending on how much volume we get to the upside, or if we see a blow off top and a short squeeze, we could blow through 413 and head straight to 417. But with this low volume, it's not likely we're going to blast right through that next resistance level at $413. We would need to see some short squeezes coming in, and we would need to see some big buying volume to send the SPY through that level. Note that we're still in a very strong bull trend, and if you're trying to short this market too soon, it's like trying to call a top, and it's not as easy as it sounds. Anybody who tried shorting back here around 406 is now feeling the pain as we slowly melt up here to 411. Just remember, there's always the possibility that the stock market does one of these sideways corrections and we leave that gap open to cause the most amount of pain for the retail investors. In this situation, this is still a stock market correction. It's just a correction through time instead of a correction through price. However, if we do see selling volume, it's more than likely we're going to swiftly close that gap and then we will see a bounce off that level. Either way, we're going to see one of these corrections and it's still going to bring us to the same ending point, which will be after the stock market correction is over. Don't forget, we got a lot of earnings this week, starting with the banks, and then right after the banks, we're going to roll right into the big tech earnings. It's always a possibility that the earnings are priced in ahead of time, and we're going to see a sell the news event. So don't just assume because the earning reports are going to be good that the stock market has to go higher. Everybody knows the earning reports are going to be good. So if everybody knows it, you can safely assume that it's already going to be priced in. Next up is the NASDAQ 100 QQQs ETF, and we see the QQQs going down about 0.13% today. We did have a flat day today, and just like with the SPY, you can see all of these candlesticks continue to close in the green. That means we're closing higher than we open, and that low volume melt up is continuing on the NASDAQ 100. You can see we had extremely low volume today, and the volume continues to trend downward, which means we could easily see that increase in volume and selling and take the elevator down. The risk levels I want you to pay attention to on the QQQs are going to be these gap closes, and the first gap will close around $332.50. The next gap is right around $325, and the 20 simple moving average is now down here around $322. Keep in mind, just like with the S&P 500, we're in a very strong bull trend, and it's not like we have to close these gaps right now. These gaps can be closed later on during a stock market correction, and they can remain open. So don't look at these gaps and assume that they have to close and try to short the top, because the top could be way up here at the next price targets at 341 or 350. It's the same exact thing I said with the S&P 500, that we can continue to correct through time as we get closer and closer to these price targets. So pay close attention to 341, and if we start breaking and closing over there, it means we're likely heading to the next price target at 350. Remember that we now have 3 closes in a row over 334, which increases the probability we're going to see these next price targets. So it's not the time to be getting overly bearish just yet, because we still have upside in this market and we still don't see any sellers showing up. That could change at any moment, so you still need to be cautiously bullish and make sure that you have cash at these levels so that if we do see a sell-off, you have cash that you can put to work at lower prices. In the Dow Jones, we dropped about 0.09% today, and we closed right at that price target around 337. It does look like the Dow Jones is in a very strong bull trend with very strong bullish price action, and it's likely going to continue to grind up towards the next price target up here at 341. We do have gaps open on the Dow Jones as well at 335 and $331. The 20 simple moving average is now sitting around 331. Also note the volume is very low, just like with the S&P 500 and the NASDAQ 100. On the Russell 2000, we dropped 0.39% today and got another price action close below that 20 simple moving average. The Russell looks like it's still in a consolidation and a correction, but it is trading above the 50 EMA. We would need to see a close below the 50 EMA at 219 to get a bear market started in the Russell 2000. The upside resistance is going to be the 20 simple moving average, our resistance trend line around 224, and then our resistance levels at 227 and 233. Downside support is going to be 219, 210, and 205. On ARKK ETF, we dropped 0.64% today, and we continue to close below that 50 EMA, which is now at 126. We are holding up above the other moving averages, and the 20 simple moving average is now sitting at 121. We have a downside gap to fill still at 115, and if we fill that gap and continue to head lower, we could find support at the support trend line at 111. Remember, for ARKK to start looking bullish yet again, we need to get a couple price action closes back above the 50 EMA at 126. So we're not quite there, and ARKK is still in a neutral trend, and it's still trading below the 50 EMA. So don't get overly bullish on the ARK ETF, because at these levels, it could break down, and it could continue to go into a bear market. Next up is the VIX, which is our fear indicator, and we see the VIX going up 1.32% today, which is not exactly what you want to see on a day that the S&P 500 goes up. Normally, the VIX goes down when the S&P 500 goes higher, and this could yet again be another warning sign that there is some volatility building up under the surface, and we could be seeing a spike in the VIX. However, don't hang your hat on that because we still need to watch the price action. So in order to see volatility, we need to see the VIX getting back into the 20s. We're currently sitting at 16.9, but it is possible that the VIX spikes very quickly. As you can easily see by looking past in the chart, you can see we had huge spikes in volatility at a drop of a hat. So this is why I keep saying be cautiously bullish, because the VIX is low, which does imply we're going to all-time highs. But always keep in mind that when we're at all-time highs, it only takes one giant volume wave of selling to cause a huge move in the market. So you're seeing the market going up on low volume, and it will move in a big way when that volume does increase, and it's very likely going to be selling volume and not buying volume. So respect the VIX and watch these levels very closely, and wait to see if you see any sign that the VIX is starting to spike, and that will be your cue that we could be starting to see selling in this market. On gold, we're cooling off a little bit after this nice bounce off support, and it still looks like we're trying to get back above the 50 EMA, which is at 1758. Our price targets are 1761 and 1776, with our support level being down here around 1685. On silver, we failed to break above the 50 EMA, and we're back below that support level at $25. This could mean we're going to try to put a higher low in on this chart and make another attempt at that 50 EMA, or it could mean that we're going down another leg lower to the next support level at $23.50. Upside resistance is going to be right around $25.12. On Bitcoin, we finally do see some positive progress for the bulls, but again, it's all on low volume. We don't see any volume in a lot of these markets, and really Bitcoin is still just chopping around and hanging around that $59,000 to $60,000 level. Remember, the price targets above are still $62,500 and $64,000, but those are just a little bit of upside for a potential huge downside risk. But right now, we'll give benefit of the doubt to the bulls because they're still maintaining bullish price action with a bullish trend. Remember, if we start breaking down below 55,000 and the 50 EMA, that's when the correction is going to be here. So just like I say with the other indices, don't try to call a top on Bitcoin, but it is possible that we're going to see this correction in the very near future. So be defensive and make sure if you are trading Bitcoin that you have a very critical stop loss set so that you don't get trapped in a flash crash. On Amazon, we went up 0.21% today, and we found resistance right at our resistance trend line around 33.83. If Amazon can break out of this resistance level, our next price target we're looking for is around 34.42. Downside support levels are going to be 32.97, and our next support level is right around 32.22. We could find support at the resistance breakout around 32.60. Amazon's looking really good, and it's almost going back into a bull market. We just need to wait for that 20 simple moving average to cross back above the 50 EMA. It looks like at this rate, it should have no trouble doing that. Next up is Tesla stock, and we finally see Tesla making some positive progress and breaking and closing back over that 50 EMA at $689. Tesla went up 3.69% today, but it is going to find resistance very soon, right around $718. If Tesla can confirm this breakout tomorrow, it could start going back into a bull market, and you can see these moving averages are already starting to stack to the bull side. They just need to get back above the 50 EMA. So my Tesla price targets are 718, 762, and the resistance trend line is right around 778. Downside support is now going to be the 50 EMA at 690 and the 20 simple moving average at 666. If we do break back below the 20 simple moving average, that means this was a false breakout and we're going back to support at 618. On Apple stock, we dropped 1.32%, which really isn't that surprising after this monster move. We did find resistance right around that 132.75 level, and we could be back on our way to close the gap at 128. We do have support above the gap though at 130, and that level could hold up, and we could make another attempt to try to get back up towards the price target at 134. We're not in a full bull trend just yet because the 20 simple moving average still hasn't crossed back above the 50 EMA, but Apple's price action is looking really solid, and we see a very impulsive move for the bulls. So watch the downside support very closely at 130, 128, and 127. On the financial sector, we went up about 0.43% today, and we're still maintaining bullish price action with a bullish trend. The bank's earnings will be this week, so we're going to see a lot more critical price action in this sector very soon. On the industrial sector, we went up 0.37% today, still maintaining some really strong bullish trending with a very strong bullish price action close. On the healthcare sector, we went up 0.10% today, and we're still maintaining bullish price action with a bullish trend, and it looks like the healthcare sector is well on its way to going back into this bull market. On the energy sector, we finally got down to the 50 EMA, and it's been a long time coming waiting for this moment. So the big test for the energy sector is whether or not it's going to bounce off this level and try to go back into a bull market. If the energy sector does start to break below the 50 EMA, it could be a sign that the energy sector is going back into a bear market. So let's go back to the S&P 500 and summarize. We still see very bullish sectors across the board except for that energy sector, which has very little weight in the S&P 500. We still see a very low VIX, which is low fear, which does favor the fact that we could see a low volume melt up and continue to grind to all-time highs. Just remember to be cautiously bullish, and what I mean by that is the higher we go, I want you to still remain bullish, but I want you to be cautious and I want you to have cash. You don't want to get caught being 100% in this market because you're getting greedy at these levels. It's going to be very painful when we finally see that swift wave of selling, and if you have no cash, you're going to take a huge hit to your portfolio. Also reduce your leverage at these levels and don't be buying short expiration date call options and XXX ETFs at these very high all-time highs. Be disciplined and be patient because there's always going to be a better buying opportunity right around the corner as long as you're willing to wait for it. Remember, on the Stocks Channel Discord, I'm giving intraday updates on the market, and we're still finding quite a few good trade ideas that are still doing very well. So while this volume is low volume and it's melting up, there still are some good trade ideas out there, and we are capitalizing on those while we can. If you're interested in the Stocks Channel Discord community, you can find out how to join by clicking on the link in the description of the video. All right, next up, let's take a quick look at our trade idea, which is still Shopify, and we see Shopify cooling off a little bit today, going down over 2%. We closed right on top of that support level right around 1203, and we're very close to retesting that 50 EMA at 1176. We're slowly but surely developing a bull trend, and the longer the price action can stay above the 50 EMA, the more bullish Shopify will start to build a bull trend, and we'll start getting ready to go to these next price targets above. The next price targets above are going to be 1260 and 1316. We will have one more price target above, which is the gap close at around 1360. So there's still plenty of upside left in Shopify, and we'll continue to cover it until we meet all of our price targets, and I'm going to help you stay on the right side of this trade the entire time. Remember, there's more trade ideas on the Stocks Channel Discord weekly, and if you're interested in joining the Stocks Channel Discord community, you can find out how to join by clicking on the link in the description of the video. So remember to be cautiously bullish at these levels, continue to enjoy trading to the long side, but be defensive and make sure you have that cash position. And as always, I will see you in the next episode.